Hello, welcome to Astronautics for Exploit. I am Dr. Anyashola Ogundele and I will be presenting space investors, propellants, and unalloyed supporters of the new space industry. The overview of my presentation is as follows. Startup space ventures, classifications of space investments, types of space investors, startup space companies' unique investors. About half a century ago, precisely on July 16, 1969, at about 8:32 a.m. Central Daylight Time, Apollo 11 was launched with the main goal of performing the first human landing on the moon. Commander Neil Armstrong, Command Module Pilot Michael Collins, and Lunar Module Pilot Edwin Aldrin entered lunar orbit on the afternoon of July 19, 1969. On July 20, 1969, Armstrong and Aldrin began their descent to the lunar surface in the lunar module, called Eagle. The planned landing site in the Sea of Tranquility was selected as a flat, safe location and had been surveyed by Apollo 10 at an elevation of 10 miles above the moon. During the moon landing, Collins remained in lunar orbit in the command module, Columbia. After about 21.6 hours on the moon, Eagle's ascent stage returned to lunar orbit and rejoined Columbia. Altogether, Apollo 11 spent 2.5 days in lunar orbit, circling the moon 31 times. The crew returned safely to Earth on July 24, landing in the Pacific Ocean, southwest of Hawaii, after a flight of 8 days and 3 hours. During the period of moon landing of July 20, 1969, human space exploration was mainly centered on manned low Earth orbit missions and unmanned scientific exploration. But presently, there's high levels of private funding, increase in number of space enthusiasts, advances in technology, and growing public sector interest. All of these are contributing factors to the increase in interest on investing in the new space companies. Space systems, space technologies, innovations as a result of space exploration and space spin-offs are increasingly becoming critical infrastructure to which the world's economy, scientific, national securities, and communications depend upon. All of this came into being as a result of many years of continuous investment by both private and government organizations, research and development, and persistent curiosity of human beings to do what has not been done before, to go where no one has ever been, and to develop new things for the benefit of mankind. Space capabilities, made possible through investments, robust and highly qualified space workforce, are a source of national pride, and as a result, investments are geared towards increasing the capabilities for better living conditions and competitive advantage. Sustained investment in space will support a durable economy. Public and government investments in space is essential to the good health of the space industry. Startup space ventures. Space industry encompasses companies involved in the space economy and provision of goods and services related to space. Manufacturing of satellites, launch vehicles, other space-based systems, and satellite ground equipment is also a function of space industry. Space industry also provides services such as provision of services that rely on satellite TV, radio and broadband, provision of analytics services based on data collected extensively from space-based systems either alone or in combination with terrestrial systems. This picture shows mass manufacturing of satellite hardware. A startup space company has particular momentum behind it, and this is based on perceived demand for its products or service. The intention of a startup space company is to grow rapidly as a result of offering something that addresses a particular space market gap. This picture shows Virgin Orbit's 747 Cosmic Girl and Rocket Launcher 1 for launching small satellites. This was developed so as to cater for the increasing demand in small satellites. Space economy. Space economy refers to all public and private actors involved in developing and providing space-enabled products and services. It comprises a long value-added chain, starting with research and development actors and manufacturers of space hardware, and ending with the providers of space-enabled products and services to final users. This picture shows Blue Origin Space Tourism rocket for space tourism activities. Silicon Valley, a major catalyst who recognized the potential for satellite data to drive information-centric business applications, fueled efforts to reduce the cost of building and launching satellites. The picture here shows SpaceX Falcon 9 reusable rocket. The role of government in startup space companies and investment landscape. An increasingly important feature of the startup space investment landscape is the enabling role which is played by the government, such as a source of direct funding and a perceived stamp of approval that builds confidence among private investors. Rapid development. Lucrative government contracts could help rapid development of startup space companies. And governments take all this an increasingly important element of the potential success of venture-funded space startups. This picture shows Virgin Galactic Spaceship 2 and Whatnot 2 for suborbital space tourism. Classifications of space investments. Space investments can be classified as follows: seed funding, venture capital, private equity, acquisition, public offering, debt financing, valuation, and casualties. Seed funding. Seed money, which is known as seed funding or seed capital, is a form of securities offering in which an investor invests capital in a startup company in exchange for an equity stake or convertible note stake in the company. Seed refers to early investment, which is meant to support a business until it can generate cash of its own or until it is ready for further investments. Seed money options include friends and family funding, seed venture capital funds, angel funding, and crowdfunding. Seed investment was reported to rise by 31% in 2019 from $999 million to about $1.3 billion. Super angel seed investment. Seed funding totals are dominated by a few super angel seed investments, including investment by Jeff Bezos of Blue Origin, Elon Musk of SpaceX. Elon Musk's early investment in SpaceX, about $100 million in 2006. Richard Branson's of Virgin Galactic investment in Virgin Galactic, and Robert Bigelow's investment in Bigelow Aerospace. $250 million largely invested around the period between 2010 and 2013. In 2019, it was reported that seed investment totaled about $1.3 billion. So this section is divided into A, which is 11%, that is the other seed investment. We have the Virgin Galactic, which took 12%. We have the Blue Origin that took 76%. In 2019, 88% of seed investment belonged to Virgin Galactic and Blue Origin, as reported by Bryce. Venture capital and private equity. In 2019, OneWeb received the largest capital deal of about $1.25 billion Series D round offered by SoftBank and others. SpaceX, Virgin Galactic, Quantum Partial Intelligence, and Relativity Space also raised venture capitals. In 2019, the number of venture capital firms investing in startup space increased by about 34%, from 142 to 190 firms, and 75 space startups reported venture investment. The number of venture capital firms investing in startup space increased by about 34% in 2019, from 142 to 190 firms. Private equity. Private equity investment in space startups is total about $1.8 billion since about 2000. Notable private equity transactions since 2000 include Hammer Investments of $380 million in Virgin Galactic in 2009. O3B received investment in 2010 from a group of investors including Google, Northbridge Venture Partners, Ellen & Company, Liberty Global, HSBC Holdings, Developed Bank of Southern Africa, Sovina, and Sadia Capital. In 2011, Ligado Networks raised about $265 million from Abingil Capital Partners and Spectrum Equity Management. Acquisition. From 2000 to 2019, acquisitions of startup space ventures was about $3.8 billion, 40% of the value and transactions from acquisition in space startups since 2000 was estimated to be $1.5 billion. 2019 startup space companies acquisition are as follows. Cubic Corporations acquired Novotronics, EcoStars acquired Illusphere, Cerberus Capital Management acquired Stratolon Systems, Planet acquired Boundless Partial and Blackbridge, Millennium Space Systems acquired by Boeing, and Virgin Galactic merged with Social Capital Edozovia. Public offering. Some of the startup space companies traded on public markets are Virgin Galactic, Uted Cast, Exact Art, Star Trek Initiative, and Clio Space. Uted Cast became public after a reverse IPO, and Virgin Galactic became a publicly traded company in 2019 after merging with Special Purpose Acquisition Company, known as Social Capital Edozovia. Sir Richard Branson's suborbital space tourism startup, Virgin Galactic's merger with SCH paved way for public trading of Virgin Galactic shares. Space investment through debt financing and valuation. Debt financing. Debt finance is borrowed money that you pay back with interest within an agreed time frame. The most common forms of debt finance include bank loans, overdrafts, mortgages, credit cards, and equipment leasing or hire purchase. Some of the startup space companies that have embarked on debt financing transactions are SpaceX, Audacity, Ecometria, Kepler Communications, Space Tango, and other space systems, O3B, Planet, Other Space, and Outcast. Valuation. Investors focus on valuations and exits. SpaceX is a space unicorn, that is, a private company with a valuation of about $1 billion or more. In early 2020, SpaceX valuation was reported at more than $36 billion. Other unicorn startup space companies are OneWeb, Planet, and Rocket Lab. Startup on path to unicorn status are Spirit Global, Relativity Space, Mapbox, and Kimeta. Space investment through casualties. Venture capitalist business model. Venture capitalists pursue a business model where the majority of the startups on which they place bets will fail. Investors are willing to accept these odds because those startups that do succeed provide payoffs that more than offset the losses. Some startup space companies have not reported any revenue. Investors generally agree that late-stage capital tends to be driven more by performance rather than promise. Startup space casualties in 2019. High-profile startup space casualties are Vector, which was developing a small satellite launcher, Leosat, one of several companies planning to deploy large low-Earth orbiting satellites for global broadband services, and Odyssey, which was developing a constellation of data relay satellites. The aftermath of the casualties had that Lockheed Martin obtained Vector's galactic sky satellite technology assets. Electro-optical system acquired Odyssey and its license so as to establish its own communication system. Classification of space investments. 2019 investment was reported to be about $5.7 billion, and it is divided as follows. Debt financing took 4%, acquisition 2%, seed 23%, venture capital 71%. In 2019, venture capital accounted for about 71% of the investment. Different types of space investors. We have the angel investors, venture capital firms, private equity firms, corporations, banks, and public markets. Functions and investments of angel investors. Angel investors, which is also known as private or seed investors, are individuals or families who provide capital for a business or start up businesses, usually in exchange for convertible debt or ownership equity. They usually give support to startups at the initial moments, where risks of the startups failing are relatively high, and when most investors are not prepared to back them. Angel investors seek potentially high returns by investing in ventures during their early stages. In recent years, angels have also participated in syndicates pooling investments with other angels and venture capital firms to provide more funding to startups. This model enables an angel to invest in more companies and spread risk. Instead of investing $100,000 in a startup, 4 angels will invest $25,000 each. If the startup fails, the angels have minimized risk through smaller, more frequent investments. Investment by angels into startup space ventures is usually in the form of straight equity into the company. Investments often range from $50,000 to more than $1 million. Time horizons for angel investors are about 5 to 7 years, and this implies that they seek to realize their return, that is, exit, about 5 to 7 years from the date of investment. Angels may expect an equity stake in the company as high as 30 to 40% in return for their investment. However, frequently, angel stakes are much lower, especially after subsequent larger investors join the capital structure. Angel investors range from those who can comfortably make a $50,000 investment to commercial space ventures. Super angel multi-billionaires typically invest in space startups at the more than $100 million level. These investors have already made their mark in technology-driven enterprises. Examples is found in Jeff Bezos of Blue Origin, Amazon, Elon Musk of SpaceX, PayPal, and the late Paul Allen of Stratolaunch, Microsoft. Super angel investors' interest in space investment, known as self-finance, are spurred by profit-seeking, space exploration, space tourism, and advancement of scientific knowledge. The investment totals and impacts of super angel investors on the wider picture of investment activity is more than $100 million. This fact is from Bryce. Venture capital firms. Venture capital is a form of private equity financing that is provided by venture capital firms or funds to startups, early stage, and emerging companies that have been dreamed to have high growth potential, or which have demonstrated high growth in terms of number of employees, annual revenue, scale of operations. Venture capital firms accept a significant degree of risk. Venture capital is invested in exchange for an equity stake in the business. The return of the venture capitalist as a shareholder depends on the growth and profitability of the business. This return is earned when the venture capitalist exits by selling his shareholdings when the business is sold to another owner. Venture capitalists assist at 4 stages in the company's development, such as idea generation, startup, ramp up, and exit. VC funding stages or rounds, such as Series A, Series B, Series C, and host of others. The form of investment is equity, and the instrument is usually preferred stock. The VC firm has an equity ownership stake in the company, but at a higher priority than investors at common equity, and a lower priority than any others of company debt. Functions and investment of venture capital firms. Series A investment rounds typically range from $2 million to $10 million. Series B in the low tens of millions of dollars, and Series C in the high tens of millions of dollars. Venture capital funds are generally three in types: angel investors, financial VCs, and strategic VCs. Some of the factors that influence VC decisions include business situation, sole investment in certain industries, investment preference, locally, national, or global, and varying VC expectations. Space-oriented VC funds are coming from Space Angels, Seraphim Capital, Bessemer Venture Partners, Space Resources, Cybernaut, Starburst Ventures. Investments by private equity firms. A private equity firm is an investment management company that provides financial backing and makes investments in the private equity of startup or operating companies through a variety of loosely affiliated investment strategies, which includes leverage buyout, venture capital, and growth capital. Private equity firms manage funds of capital on behalf of limited partner investors with a mandate to invest directly in companies. They traditionally invest in established companies, often acquiring an entire company or a group of related companies that can match. The funds managed by private equity firms consist of capital commitments of the institutional investors, such as sovereign wealth funds, pension funds, and family offices. Typically, a private equity firm will raise pools of capital or private equity funds that supply the equity contributions for the transactions. Private equity firms will receive a periodic management fee as well as a share in the profits earned from each private equity fund managed. Function and investment of private equity firms. Private equity firms with their investors will acquire a controlling or substantial minority position in a company and then look to maximize the value of their investment. Private equity firms generally receive a return on their investments through one of the following avenues: an initial public offering, a merger or acquisition, a recapitalization. Examples of private equity investment in space include Blackstone's $200 million investment in Sirius satellite radio and its nearly $1 billion purchase of the commercial satellite capacity provider New Sky Satellite, Columbia Capital's substantial investment in SM Satellite Radio, and Legado Networks, formerly Light Squared Company. Appan's Permira and Cali Group's multi-hundred million dollar investments in the acquisitions of large satellite services companies such as Intelsat, Inmarsat, and Panamsat from 2003 to 2004. Permira bought Asia Broadcast Satellite for $200 million in September of 2010. Corporations. A corporation is an organization, usually a group of people, or a company authorized by the state to act as a single entity. Corporations provide funding necessary to bring space-based programs to initial operating capability as well as to sustain ongoing programs. They invest internally in R&D, manufacturing, operations, and processes so as to enhance capabilities to create or strengthen an existing expertise or advantage. Equity and debt. A corporation may also provide funding for a venture, usually in the form of straight equity or sometimes in the form of debt, often with the option to convert the instrument into equity of the investee company. Some large companies may also invest through a corporate venture fund. For example, Boeing, Horizon X, and Lockheed Martin Ventures, which acts as a company-owned VC equivalent. Corporations' investment in space. Lockheed Martin invested in small launcher ABL space systems. ESRI and Airbus invested in I-360. Chevron, Sky Perfect, and Google invested in Orbital Insight. SoftBank, Virgin, Coca-Cola, Intelsat, Airbus, and Aegis Network Systems invested in OneWeb. Google invested in SpaceX so as to support continued innovation in areas of space transport, reusability, and satellite manufacturing. Banks. For many years, banks have been heavily involved in providing and facilitating funding for space-based programs of large and well-established firms such as geostationary satellite operators. The basic model is that equity investors provide a substantial cushion, for example, 30% of the total capital expense or capex required for a certain program, such as the deployment of a satellite or satellites. Commercial banks such as Wells Fargo, Citibank, Deutsche Bank, BNP Paribas, and ABN AMRO have provided debt financing at a magnitude of about $100 million to $1 billion per funding event. Most of the companies financed are companies with large satellite capex requirements, for example, Intelsat, SES, and Inmarsat, for which multiple geostationary Earth orbit satellites are required at a cost of $250 million to $300 million each to build, launch, and insure. Other companies financed, for example, Iridium and Globalstar, have $2 billion to $3 billion capex requirements for low Earth orbit satellite constellations. Public markets. Towards the later stages of a space-based company's funding trajectory, there can be a public sale of the company's equity, common stock, or initial public offering. The IPO enables additional capital to be raised to supplement prior funding rounds and provide previous investors an exit mechanism for their investments, that is, sell their equity shares in the public marketplace. IPOs in the space industry are ranging from around $100 million, for example, Globalstar and Upcom, to about $800 million, for example, Intelsat. Many established space companies and government contractors have long since had their IPOs and continue to trade publicly. Examples include Boeing, Lockheed Martin, Northrop Grumman Corporation, and Ares Corporation. ClearSpace went public in 2018 with an $11 million IPO raise. Virgin Galactic became a publicly traded company in 2019 after merging with Social Capital Edosovia. Virgin Galactic became a publicly traded company in 2019 after merging with Special Purpose Acquisition Company, Social Capital Edosovia. Virgin Galactic raised about $500 million in venture capital through the merger with the fund. Space investors. In 2019, it was reported by Bryce that 967 space investors range between 2000 to 2019. And it is classified as follows: banks 4%, private equity 7%, corporations 17%, angel investors 22%, and venture capital 51%. In the time range, physicists are the largest investor group for space startups. Classification of space investments. So, angel investors, high net worth individuals, families or groups of angels, and they have the space investment ranging from $50,000 to $1 million, and the type of investment is equity. Examples of transaction: York Space Systems with $250,000 of angel investment from Dylan Taylor in 2015. And the expected returns or exit horizon was given by 5 to 10x investment, 5 to 7 years. We also have venture capital firms, group of investors focusing on early stage, high growth ventures and accepting a significant degree of risk, with space investment ranging between $2 million and $75 million, equity preferred stock in several tranches. We have the private equity firms too, which is large investment houses that have multi-billion-dollar investment funds, and the space investment ranges between $100 million and $1 billion, and the type of investment is equity. A sample is found in Virgin Galactic with $490 million of investment from ABBA Investments. Also, we have the corporations, large companies providing strategic investments to support large capex space projects, internal R&D for special projects, independent R&D as government contractor, merger and acquisition, and venture investing. Space investment is in the range of $100 million to $1 billion, and the type of investment is equity and sometimes debt. Example can be found in OneWeb. We have the banks, private and government-backed banks, providing substantial debt financing layered over equity, and the investment ranges between $100 million and $1 billion. The type of investment is usually debt. Public markets, independent R&D as government contractor, with investment ranging between $100 million and $1 billion, and the type of investment is equity. Startup space companies, unique investors. So we have the Space Angels Network, Founders Fund, RRA Ventures, Data Collective, Bessemer Venture Partners, Luz Capital, Alphabet, Tencent Holdings, Rottenberg Ventures. These are selected examples. So Space Angels Network sponsored the following were the Astrobotics, Kepler Communications, Planet Labs, NanoRacks, Planetary Resources, Worldview, Action Systems, Adozat, Escort Aerospace, Analytical Space, Vector Space, and OmniArt. Also, Founders Fund for SpaceX, Planet Labs, Action Systems, and Moon Express. RRE Ventures provided support for Spirit, spaceflight industry, and Action Systems. Data Collective provided support for Rocket Lab, Descartes Labs, and Planning Labs. Bessemer Venture Partners supported Terabella, Spirit, and Rocket Lab. Luz Capital supported Kimeta, Planet Labs, and Abido Insights. And Alphabet supported O3B Networks, SpaceX, and Abido Insight. While Tencent Holdings supported Satellite Logic, Planetary Resources, and Worldview. And Rottenberg Ventures supported Planet Labs, Worldview, and SpaceX. For more information, contact Astronautics for Exploits. You've been listening to Space Ventures, Space Investors, Propellants, and Unalloyed supporters of the new space industry. Thank you.